All right, what is up, YouTube? I am back. I know it's been a while since I made a video, but I'm definitely back. We're going to talk about Square today. We're going to also talk about, what does the market do a couple months out in advance, or maybe, all the way out to 2018, which is nothing but a month away, just about. So let's go ahead and check out Square. Oh yeah, I forgot to tell you guys. So like I always do, my account. Remember, I started with just $200,000. Now my account is just about over $240,000. Remember, I was buying I was buying all these investments. I was saying, you know what, just wait. Later on in the future, they're definitely going to be worth a lot more money. And so you have it right here. We have Apple hitting all-time highs. My buying price for that was at 144. We used our, our buying indicators, or what you call, our tools to help us, find perfect price points, or not perfect price points, but we want to get, we want to get close enough to where we find that bottom. And that's how you make your money. Also, Berkshire Hathaway, I got in just right there at the bottom or close to the bottom, and now Berkshire Hathaway is $5 away from hitting another all-time high. We have Clorox. I bought Clorox just because, but I'll just have 5 shares of that. We got Home Depot. I'm up about $1,900 on that. This is the penny stock. As you see, it's definitely been fluctuating around up and down. And we're going to see how long does it take until this thing hits back up to $1 or maybe even 1 cent. So we never invest in penny stocks, but we definitely want to, take our chance and do some research and understand how these things work before we actually dive into it. I definitely understand how these things work. If you want to understand how they work, definitely message me on Instagram. I can set you up for a lesson, set you up for a lesson or an appointment sometime soon. Also, Starbucks. You see Starbucks is back at $55. I'm definitely taking a loss on this. We see Starbucks is definitely hitting $64, which is, getting ready to make an all-time high just about. And ever since then, it's fell back down just because they showed that, growth is definitely slowing down. It's not speeding up as people thought, they would. We got the triple Qs here. This is the leverage triple Qs. As you see right here, it's all the way up at $8,000. My Take-Two Interactive, I'm up just about $13,000 on that. Remember, they were, these two are definitely fighting just about to see which one is going to be on top. But as you see, Take-Two definitely took the lead on that. And let's see if I can find my, my exact buying price for Take-Two. Let's see, field orders. Maybe we go to account statement and find out where I bought the Take-Two. So you see right here, I bought Apple. Let's see if we can pop it up. Okay, so here we go. More simple. So I bought Apple at 144, Clorox at 133, Starbucks at $59. This is definitely the penny stock, and you see how much it has risen since now. Berkshire Hathaway at 165, and you see it at 183. The triple Qs, which is more leverage risk, and we talked about that, my videos before. If you do not understand, definitely go back to when I start to buy these, different types of ETFs and also different types of companies. Remember, my portfolio was not the same as it was months ago. We definitely made changes, and every time I made a change, I always posted a video. So you guys were always included every time I made a new investment. Also, Take-Two Interactive, you see where I bought it at, $71. And you see, we can go back to here at $71. Now it's at, what is it, 117. So you definitely see how the investments have definitely grown, with just a couple months in the past. So you see right here, 144, bought it at $99, and definitely buying it to leverage growth was definitely a no-brainer. So this is what happened to Square. Basically, I'm gonna give you, my take or my opinion on it. Like I said, I never want to steer you guys wrong, but I'm gonna tell you guys. So I was trading Square right here. It's like I said, I made a video on it around $18, trading 19, trading 20, and I said, okay, I'm just go ahead and invest in this company. I bought it. I bought shares at 25. I bought some shares at 30, 35, and I bought some shares at 40 and then 45. But now we see the stock is definitely taking a rest. Now, I bought shares at that $45 level, even though it was oversold, overbought, heavily overbought. We see the momentum indicator showing us that this stock was definitely due for a pullback. And I told my friend, I said, hey, this thing is going to go to 50, and once it goes to 50, you better watch out. You better pace yourself, because this thing is definitely going to come back down. But now we see it's definitely breaching that daily movement average, and we already know what happens when it breaches that daily movement average. If I'm talking too technical for you, definitely comment at the bottom or at the video below, or look at the description. Hit me up in my inbox on Instagram, where we definitely can set you up for a lesson. I can definitely walk you through the technical jargon I'm definitely speaking of. But we see Square. My price target for Square was at $45, to be honest with you. That's why I bought it at $45. But to see it zoom past and go get close to $50, the earnings was definitely good. Remember, it started earnings right here. So it started earnings right here at this $33 level, $33 to $37 level right there. And then once we got good earnings, I knew that it was okay. It was okay to go to $40 and maybe get close to 45 and, get checked back down. But when people in Wall Street, when they're looking for growth, they will always want to buy growth. And once you get that bad article or that bad analyst that comes out and said, okay, you know what, guys, growth is definitely gone here, that's when a lot of investors leave, or when people are ready to take profits. And they're, like I said, they have an itchy, that itchy trigger finger. They just want to pull on any type of news. This is exactly, the time that they pull right here, 49.56. And you see right here, the big down day, down 16%. I was up about, I think I still am up about, over 60 or maybe 50% in on the stock. So we see right here, the analyst definitely said, it's going to be hard for this company to be profitable, blah, blah, blah. But once we read through the transcript, like I said, we have to read through the earnings transcript. This is definitely what made me start to invest in this company. Once you read through the earnings transcript, you're definitely more confident. You're definitely more reassured of what you're buying when you do invest. Like I said, get a hold of that earnings transcript to understand what happened here. We know that this company is fairly new. Well, not fairly new, but you understand it's fairly new to the game. They start to invest more in the business. Like I said, incredible returns on the inside. Definitely releasing out new products. They're definitely going into bigger stores. Definitely things like that. You have to read the earnings call transcript to understand what's going on. If you in this analyst call right here that gave it a downgrade, this is definitely just noise, and you really don't have to pay attention to it. But if you're buying at $49 thinking you're going to trade this and do things like that, no, you're not going to win that way. We don't want to trade growth. We always want to invest in growth. And as you see right here, Square has definitely provided a heavy growth return right here from $12 all the way to $49. And if we go back, the dip, I think the dip was about $8. And when we go back even further, I think IPO was at like $10, I think. So I remember buying some at $10.44 at IPO. But we see exactly what's happened here. We see that beautiful chart pattern right there. We see it run up, but like I said, whenever we have a big overbought signal right there, we definitely have to take that, as caution for us to actually, stop buying, take some time, review what's going on with the company, review what's going on with the charts, wait for a pullback, and we got a healthy pullback, and now we're breaching below that daily movement average. So now we have to wait just a little bit longer. I think it might, test back on resistance at $40. It did hit $40 today, but that was like towards the close. So we're gonna see how we're gonna see what happens when it opens up tomorrow. And I think it might hit low of 37. That might be old support or resistance, whichever one or however the stock wants to play it. But we definitely know this is definitely where growth is, just because of the earnings transcript. I keep referring back to this earnings transcripts because remember, that is what's going to help you. That's going to be your guide to is this company something that you should have in your portfolio, things like that. But like I said, when analysts do give us, gives these upgrades and downgrades, I really don't pay attention to them. I really don't lose any sleep over them, because I already know the people that are, looking for, a small article to sell on that news. These are the traders. These are not investors. So if you're investing in Square over the long run, this is definitely the company for you if you're looking for growth. But also we have to pay attention. It doesn't pay out a dividend. But that's neither here or there. Take-Two Interactive is definitely video games. We see that crazy return. I was actually buying this at 44, and now it's at the all-time high is at 120. And we see right here it's bumped up against resistance, and we already know what happens when a stock hits up against resistance. It usually gets checked down, or we have to have some kind of good news to come out, or if we have an analyst, like I said, we have the analyst that come out and downgrade this stock. This is going to send the stock, back to lows of maybe 111 or you know, we're going to feel this gap right here. If there gets any type of negative news, we're definitely going to feel this gap right there. But as you see right here, the growth has definitely been outstanding for this company, especially for the stock as well. But like I said, we have to be aware of companies that always gap up and gap down. We have to understand, you know, what's going on. So we see an upgrade from 135, you know, from 112. So we see a lot of people are bullish on this stock as well. Activision Blizzard is one. Like I said, remember I made a video about this. I made a video about this a while ago, months ago, back when I first bought, you know, Take-Two software at $71. Remember I said we have to always invest in growth. We want to make sure that, you know, we're not just buying just because, you know, we think it's going to go up. You know, although we think it's going to go up, but we want to make sure that management is definitely doing their job, trying to grow company and also try to grow shareholder value for you. That is your, you know, that is your number one priority. You want to make sure that shareholder value is definitely being grown out. And we see Activision Blizzard, you know, paid out a small dividend right there, 30 cents, but that might have been something special. Also, we got EA Sports. I heard a lot of bad things about, you know, Star Wars game. We see it's below the daily moving average. If you're an investor and you're looking to invest in EA Sports game because you like the Madden or you like the Star Wars games, this is definitely something for you. And as you can see right here, we have the article right there saying about the backlash. And, you know, I think the developer was getting death threats. Now, you know, I really don't think games are that serious to where you're sending death threats to the developer. But that's definitely not a good note on the company and on the company's stock price. But back to my portfolio, this is definitely, you know, how, you know, what I like. I like to invest in growth. If growth is there, I'm definitely going to be there, you know, to actually buy the stock. Also, Chemours, I was buying this back in the 30s, and we see we had a healthy pullback right there. I remember exactly when that sell-off happened, and I just bought and just, you know, just kept buying, and now all-time high is at 58. We're $6 away from that all-time high, and we see we're kind of stagnant right there. So what we're doing right now, basically, it looks like we're waiting for some kind of positive news event or some kind of positive investor sentiment to happen for this stock to actually keep running. But until then, you know, stocks are just on cruise control, not really going up, not going down, just basically just hovering, just like we see Take-Two Interactive. They're basically just hovering right there at the resistance level, or basically just trading sideways because there's really not any news going on, and people are definitely looking for growth. And whenever you can find growth, people typically sell those other stocks that aren't making them any money, and, you know, dive into growth, you know, head first. And that's typically not what we want to do. And this is the Bitcoin ETF. I think this is available on the OTC market. I remember back when this thing was just at $20-something. And I remember understanding what Bitcoin was, but I just didn't invest in currencies, and I still won't invest in currencies. But if you're definitely looking to invest in Bitcoin, this is definitely one way to do it with this ETF. Right here on the OTC market. So that's all I have for you guys. I can't think of, you know, any more topics to talk about today, since, you know, getting ready to graduate next week. And yeah, that's pretty much it. Also, like I said, if you guys want to reach me, you can reach me on Instagram at Mike the Day Trader. Hit me up in the messages if you want to, you know, schedule an appointment. We can definitely schedule an appointment so we can have a one-on-one session together, so I can explain to you what I see in the market and, you know, which stocks are, you know, best for your portfolio, so that you can actually start to make money. Because just because, you know, you see me buying stocks like this at 71, now it's at 117, buy it at 99, now it's at 140. You know, buy Apple at 144, now it's at 174. I can always find growth. You have to do your reading and research. I'll show you exactly how to find growth. You always have to do your reading and research. So that way you can always have a portfolio that's just filled with growth, no losing stocks at all. Oh, I forgot to tell you about GE. I started buying GE in the 20s, 18s, and 7. I think I got some at 17s. They cut the dividend in half. Really don't care about the dividend, but what we see here is that basically what I think, in my opinion, is that ever since it hits this resistance level right here at $32, this is back when, you know, I was a shareholder at 32 and I sold it. I seen it getting really low. We see it hit $23. That support level, you know, kind of held for a little bit, and it broke down. And we heard about, you know, the major changes that were going on GE's board of directors, and basically the whole change that they wanted to change GE as basically giving it a new script to run with. But what I see here, honestly, is that they're trying to get that price per share low once again. I'm going to see what John Flannery can do with this company and probably bring it back up to $20 or bring it back up to $25. We're going to make some nice profits on it if you were to buy it. Right here at this level, we see it's at, it's very oversold. But just because it's oversold doesn't mean it's a it doesn't mean that it's a good buy. So what we have to pay attention to is the earnings call transcript. I really didn't like what I've seen in the earnings call transcript at all, not one bit. But November 13th, their growth plan or however they wanted to change it. Basically, the earnings call, they just said, okay, the January 1st and November 13th. Once November 13th got here, it was basically just what everybody was expected. And, there were some positives out of that, but at the same time, there was more negatives than positives. But we're going to see what this company can do next year. If it doesn't do anything, I'll just cut my losses or cut my gains depending on how far, share price this thing has run up. But I definitely do see this thing going back up to $20 or maybe going back up to $25. We're definitely going to have some kind of positive event that's going to fill us back up to the $23 or maybe $25 level. And it'll probably bang up against resistance right there. And I'll probably take some off the table, but who knows? If it starts to look like John Flannery is definitely doing something really good with this company and putting it back on track, this is definitely going to be something that you're going to wish that you bought. So like I said, you can go back and read that earnings call, but it's definitely going to just tell you, just refer back to November 13th. And November 13th is nothing but them telling you how they're going to change the company, what cuts are they going to do, what are they going to start focusing on more and things like that. So it's kind of boring, but at the same time, if you want to, get in at a low price and getting a low price at GE, because GE hasn't put out a low price in a while. Basically, GE has been dead for a while. Like as you see right here, other companies have outpaced it. You got, Honeywell definitely still growing at $150 a share. I wish I would have bought. I wish I would have held that actually back at $105 when I was buying it. But as you see, Honeywell is definitely still going up. You like that trend pattern, and basically GE is the opposite of that. But we see it's overbought, but GE is oversold. So we got basically two different worlds, two different shareholders. But if you're looking for something to take a chance on, you probably missed out on something in the market. You probably missed out on this insane run. GE will probably be one that you might want to buy, you might want to look into. But what you have to remember is that they cut the dividend in half, so it can't be an income play for you. So with that being said, guys, that's all I have for you guys today. If you have any questions, you want me to review any other stocks, definitely just hit me up, like I said, on Instagram, or just comment in the video below, and I'll definitely post another video for you guys. But after this, I'm definitely going to study and go to class. So take care and good trading.